Well, good weekend, all. Ira Epstein with your financial market wrap-up, your weekend edition for this Friday, the 19th of July, 2024. And what an interesting day, right? CrowdStrike taking it on the chin because an upgrade affected Microsoft, shut down airports, television stations, trading at a number of firms, cash market transactions of all types. What a mess. And what an interesting part of this is you learn that one company, when it has so many different clients, but it's one company, creates a point in a market that can weaken it because of that. 70% of what the computers out there, the PCs, run on Microsoft. That's another fail point. But CrowdStrike, well, here's something that was interesting. It was not anything other than a mistake. And the company owned up to it. But boy, did it impact markets. Now, the first thing that I'm noticing when I put these boards up and we were looking at them is how much red we have on them. You're up in the dollar index. Okay. You were up in Bitcoin today. All righty. And after that, you were up in the wheat. That's pretty much it. So everything else is getting hit. We keep hearing, and we kept hearing, and we continue to hear about traders talking about there's going to be a summer sell-off in the stock market. Well, we've been getting something of a sell-off in the market. So a correction, yes. I doubt that any of us think that the market's going to go into more than that. I don't look for a major turn down, and I'm certainly in that camp as well because we're on the cusp of going to be lowering interest rates soon, and that will spur on the economy. At least that is the common thinking. As it stands right now, when you look at different surveys, we're going to have the PCE coming out at the end of the week. We're going to hear about employment, where it might end up. There's been a lot of surveys by Bloomberg. I was reading those today as to where traders think on their monthly survey that will end up in the markets. And most don't think you're going to be beyond 4.2% unemployment. That's very livable. The rest of the economy then stays pretty good. If people have jobs, you can see where it's at. Politically, a lot happened this week. Will Biden stay in the race? That's the big question. Again, he's been at this his whole life. This is a big decision. This is not a man, well, what am I going to do? This is his life. What is he going to do afterwards? And can he still win the race? That is going to be the thing that you're going to have to convince him of. I've read different people that say, oh, the COVID is a convenience so that he can stay and he's ill and blah, blah, blah. I don't know that that's right or wrong. His statement is he'll be out on the campaign trail next week testing the market again. What will happen, and you've got to watch for that, is probably does he get to the point, and this is important, where the donor money shuts off. Once the money shuts off, we've already seen a number of people in his party asking him not to run. But once the money shuts off, if it shuts off, that's pretty much game over. So we'll see what happens at that point. In terms of data coming out on Monday, you're going to get the Chicago Federal Reserve June National Activity Index at 7:30. I don't know why I thought it was supposed to be out today, but it wasn't. I kept reading that wrong. Last month's index was a plus 0.18. All right. So as usual, how we start this all off is we'll start with looking at a monthly area chart of closes, and that's all this is. And with all the people are saying, here we are, on the 19th, and the market is up 0.58% to a new all-time high. The month's not over, but if it were, that's where you would be. But certainly, I'm not looking at a crashing market there, and this is the 18-month moving average of closes. When we take a look at the weekly chart of closes, yeah, the market is down nearly 2%. If we step back a little bit here, the week before was right here, and you were at an all-time high close. So I don't view this on a closing basis in any manner on a weekly basis that you've entered a correction stage. It could be a pullback in the market, but I'm not seeing more than that. When we take a look at the marketplace right now, we have a pretty interesting event taking place here. Market made the high, and we're getting a reversal in it. We haven't taken out prior lows. That's what a swing line is, prior lows. This is the 18-week moving average. This is the 100, the 200. So I can see that you can make an argument that, hey, maybe we get a reaction back to the 18-week average. I call it the line in the sand. That's often where markets go to make key decisions. What are they going to do next? I can see that. If I go to the next chart, momentum, in order for that to happen, I believe that the red line, which is today closed at 86.26, would have to close under 79. Often when that occurs, markets make a return to key moving averages after they've been what we call embedded or locked into the momentum. It's as though you have a balloon and you pop it and all the air comes out, so it starts falling back. And that's exactly what's going to happen right here, assuming there's helium in there, of course. When we look at the E-mini Dow, you went up to the upper Bollinger Band, and you've had problem here. There's a history of that. So the market finished off at 40,562. The upper Bollinger Band's 40,712, and the market stayed within the band, and again, you're overbought. Very big difference, though, between this chart and what an embedded reading is. Here you can see how the numbers are over 80. Here you're not like that. When we come to the NASDAQ, take a look at how the red line's turning down here, closed at 79.30. Unless you have a dramatic week to the upside, you're going to lose the embedded reading, and it's very probable that the market's going to target wherever the 18-week moving average comes in, and it will be up a little from where it's at right now. This is a market on the cusp of calling for more of a correction, which makes sense as the tech stocks, which led the way up, have been seeing that correction. And I track in the video for the big seven, and it can still go lower, maybe into the 110, 105 area on my work. So we'll see what that does. When I look at the Russell, well, you managed to close over the upper band barely. Again, there's a history here of not staying over that band before you fall down. But there's one other thing that you have to pay attention to. The history of not staying over a band is predicated in large part, very large part, that you're not going to have sideways action like this. See all that sideways? The sideways action can act as a base or a pipe, if you think about it, and you have a spring in it, and when it releases, you get a pop. We saw big rotation taking place over the past 2 weeks as traders moved out of the S&P and the NASDAQ into the broader market of specifically the Russell 2000 and the Dow. These are not the same quality companies, and generally speaking, that you have in those other indices. So be careful. They can be interesting in one thing, telltale that there's still a bullishness around the market because there's a movement there, but they're not the market that'll support. It's got to come, in my opinion, from the S&P and the Dow, and more or less the S&P. When you look at the 5-year notes, all you did is run up on a weekly chart into the 100-day average in the upper Bollinger Band. So this is a big resistance point, not a little one, a big one. That does not mean, traders go short there. It's where the market should run into the resistance. Pros probably taking money off the table. And at the same time, you're in an overbought market. The same thing happening in the 10-year note, as you can see in the same story. In the dollar index, we fell all the way down to the lower Bollinger Band to find support. So we're getting a bounce, but I could not call this on a weekly chart anything that's bullish. I can see where the euro loses on the daily chart now a bit of momentum and the dollar picks up. But I think that the pros will be looking at this market as resistance. 104.54 to 104.87. And they'll say it's fallen, it's going to bounce there, but the bigger picture is still to the downside. And as I said, on the euro, you had the bounce up to the upper Bollinger Band. I was hoping the market would be able to take that and run with it and come out of this sideways action. Didn't happen. Doesn't mean it can't, but the daily chart turned bad today. I don't see anything of real interest yet in the Canadian dollar. The swing line, these brown lines are going up with higher lows, higher highs. You got a lot of resistance at the green line, which is the 100-day average to the upper Bollinger Band, and momentum sort of flat. Sort of a market that just, if you will, spinning around, tries to get up and stay over the 18-day average and continues to get thrown back. In the Japanese yen, I view this as short covering. Now, at the 31st of this month of July, the Bank of Japan is going to give us a decision. The big question is, what is it going to be? I believe you will see them again cut their bond buying. I think they've cut it already by 6 trillion yen a month. I think they're going to do it even more, maybe take it up another 20 to 50% more. That will give some credence to supporting the yen. Are they ready to actually begin raising interest rates is the big question. And their economic data has you flipping a coin on that. I think the easier go is the move to do the bonds and then gradually work into the other. But that doesn't mean they can't begin to raise the rates. You can see all the market did is it negated this whole downtrend by giving you the rally over the past 2 weeks right into what I call that line in the sand. And if you'll notice, you lost your bearish embedded reading, and that was the objective, to get back to that number, and it's done it. In Bitcoin, well, should I say ex-President Trump, I want to do it the right way. Ex-President Trump is speaking at a convention now for the miners and the Bitcoin people this coming week. So he's been very pro Bitcoin, and I think that's why you're getting a bit of a rally. Obviously, under him, he wants less regulation, and that could be a positive. Is it enough to do anything? I don't know. He's certainly at odds with the SEC. As you know, Mr. Gensler has been very anti-giving ETFs and all the other things to these people. He still doesn't like that they're not under better control. In the Brent versus WTI crude, well, while I was gone, this market's fallen the lows we haven't seen in quite a while. And as a whole, what has happened in the energy is you've been fighting a battle at the 18-week average of closes. I mean, if you really step back and look at this market, it doesn't go to the Bollinger Band top or bottom. It just meanders back and forth here, void of a trend now. You have a higher high, you have a lower low. It stopped at the upper band, stopped at the lower band, and it's just sort of hanging right in there. New bearishness actually in this chart, the WTI came out with lower highs and a lower low. Now, you'd have to take out this week's high in order to tell me, it's a bear trap and the market wants to go back up here. Barring that, I think 79.22 is in the cards, and if that gives ground, maybe the 77.18. Why? Well, China finished its third palladium, and if you look at what came out of it, I would rate it a big fat nothing. They can talk all they want. There were no details. I'm not hearing anything to help the real estate industry, which is really hurting. I'm not hearing anything on infrastructure. They're going to take some more wasteland and make it into productive farms. Congratulations. We know they want to be independent of buying things around the world, trying to look inward because they are in huge fights with Europe and America in terms of overproducing, and the goods they're overproducing, we're accusing them of dumping them. True and not true, I don't know. I'll hear that, but I do know the tariffs are in place, and there's a certain amount of retaliation they'd like to do. And of course, with all the chips, they're going to be looking inward to build those industries. And in EVs, you know, they're the leader in it, and their cars are probably amongst the best. You may not want to hear that, but I read car reviews all the time, and people like these cars. Lower highs, lower lows coming down through there. And by the way, I've never been in one, so I can't answer that part. Lower low, higher high, and right through here, and gasoline still looking weak. You'd have to close back over this to get bullish. So right now, all that we had is a July 4th holiday rally into the 18-day average. The big move up, which was all this, completely fizzled, and the subsequent rally highs have not been this high. So you put it together, that's basically what you have going on. And I cover this now each morning for you in a morning video, one at 7 in the morning roughly. I start recording. It's actually right after 6, but it's out before 7. I'm recording. And then right a half hour after the stock market opens, I put out the ETF video. I do that on the ETFs because I want the ETFs, if you will, to build in everything. The charts are going to look like this. They're different colored, more studies, more lines. You'll go, that's very confusing. It's really not. There's 5 studies on the chart. Moving averages, swing lines, Bollinger Bands, and one of them is slow. Did I say slow stochastic? So you got your Bollinger Bands. You've got about 4 different moving averages, your swing lines, your window envelopes would be the other part of it. So you're going to get fundamental news from me in the morning, technical analysis. We'll look at the charts, make sure that if we're getting a buy or sell signal, there's some semblance that it's not over under Bollinger Bands on the weekly charts and that everything's tying together. You'll get 40 plus charts in the morning of both stocks, spiders, and the futures markets. I will be doing special reports starting this week now that I'm back for the summer, basically. Had a terrible summer vacation. Tornado in Chicago cut everything short on me. What a time. All right. So IraEpstein.com research. That's where you go to find out more about this. You can give a click up here and that'll take care of it. I'm Ira. I will catch up with you all in my other updates over the weekend, and I'll see you all Monday morning. You take care.